Greetings from Costa Rica and welcome to this 10-minute spiel on taxes. My name is Costa Rica Matt and I empower my viewers with information about moving to Costa Rica so that they can make better decisions. If you want to become one of those viewers, just hit the red subscribe button and that notifications bell. I provide information as efficiently as possible through my 10-minute spiels because life is far too short for long-winded lectures. So without further ado, let's talk about taxes in Costa Rica, and specifically we'll talk about the taxes involved with buying a property, owning a property, and the corporation taxes that everybody has known and grown to love here in Costa Rica in recent years. First and foremost, for buying a property, you're looking at a 1.5% national transfer tax that is an unavoidable tax obligation here in the country. You will still meet people in the Costa Rica real estate sphere who think it's possible for you to save money, avoid this tax by valuing the amount of a transfer at an artificially low price. Specifically, some of these people think you can do it through transferring the shares of a corporation rather than transferring the actual title of a property itself. They are absolutely wrong. As of 2012, tax laws have been updated so that you should be paying that 1.5% transfer tax based on the value of the asset, whether or not you're transferring the corporation or the title directly to your names. Above and beyond that 1.5% national transfer tax, you pay a 0.5% National Registry stamp for a total of a 2% obligatory flat property transfer tax rate that you'll always see in a real estate transaction no matter what. Those 2% taxes are part of the typical closing costs here in Costa Rica, which would total 4% for a real estate transaction. Above and beyond your 2% that are the taxes, you obviously have your public notary fees that can range from 1.25% to 1.75% and escrow fees. In total, it's simple to think of the total closing costs for a real estate transaction rounding out at about 4%. And typically you're going to see buyers paying that 4% in a seller's market like the one we have today. Now let's talk about the taxes associated with owning property. This is one of the reasons Guanacaste and Costa Rica became such a popular location for foreign investment. Flat property taxes, your national rate, which are set by the federal government and which cannot be changed by local governments, are a shockingly low 0.25% of the property's purchase price or registered tax value, whichever is higher. I can guarantee you 90% of the time, if not more, the purchase price of a property here in Guanacaste is going to be higher than the former registered value that the municipality already had on file. Anyhow, that's 1/4% as your base rate for property taxes anywhere in Costa Rica, and you are obligated to update your tax assessment every 5 years with a simple filing. Above and beyond that 0.25%, there is the Impuesto Solidario, or the luxury tax, which is a tax that can be almost impossible to define numerically for people who are looking at properties. The luxury tax is a 7-tiered tax with rates ranging from 0.25% all the way up to 0.55%. This luxury tax is in addition to the 1/4% that you pay as your property taxes, and it only applies to homes that specifically meet the luxury criteria. The extremely difficult thing is that these luxury criteria can be tough to understand, and while they do have a specific dollar number every year that they're providing as the dollar number above which your property should pay luxury taxes, that number is based on a calculation that comes out of a table done by an appraiser. This is not based on the purchase price of your property whatsoever. And until you have an expert luxury tax appraiser come and actually fill out the table for your property, it can be almost impossible to predict what that luxury tax number is going to be. I feel comfortable telling my real estate clients that most any purchase under $750,000 for a home in Costa Rica, assuming it doesn't have marble, quartz, crazy finishes, assuming that it's not a penthouse, a luxury apartment in an incredibly valuable spot, the luxury tax will likely not apply. You can see that even though the luxury tax standard is somewhere in the $250,000 range, because it includes the real estate value, because it is calculated through this complex formula, most purchases of properties, even up to $500,000, $600,000, can see that the luxury tax, does not apply to the property. So if you're in the process of purchasing a very nice home, do get an appraisal. In the worst cases that I see, the appraised value of this tax is going to be well below what you're actually paying for it. So you would be looking at adding on an additional 0.3% of maybe 70% of your purchase price if you wanted to try and guess at random numbers. Let's say you're buying $1 million home. I would roughly estimate that somebody would end up paying somewhere between 0.3 and 0.4% on $700,000 as their luxury tax. In addition to your property tax and the luxury taxes, you will have the county charging symbolic, very small amounts for your garbage collection. In our area, it's something like $120 a year. Let's finally touch on the corporation taxes involved. Many expats choose to purchase property through a corporation because it provides ease of use advantages. If you want to find out more about those advantages and the drawbacks of a corporation, guess what? I've got a video on that as well, and we'll provide a link to it in the description of this one. But essentially, the Costa Rica government has a flat tax that they assess on every single corporation in the country, whether or not you've registered it as a active or an inactive corporation. Now, obviously, the difference being if you want to rent your property and have economic activity through a corporation, it has to be active. That flat tax is about $114 for inactive corporations, and it's about $240 for active corporations. It can be singularly important to make sure this tax gets paid by your lawyer, because in Costa Rica, if it isn't paid for 3 consecutive years, the national government will launch a process of freezing that corporation and liquidating its assets if the tax stays unpaid. You can catch up on virtually every other tax in the book. Your annual income taxes that you have to pay, everything, your EVA or monthly tax returns for sales tax, there's some leeway there. Do make sure that over the years, your flat impuesto a las personas jurídicas, or your corporation tax, gets paid every year. Obviously, your corporation will also have taxes on its income. The top absolute corporate income tax rate is 30% for any income above $208,000. For most people who are managing properties and renting them out on Airbnb, you're going to be at one of the lower tax brackets where you see ranges of that 5, 10, 15, 20, and 25% taxes at different tiers of income as you move up the spectrum. For the vast majority of foreigners who own a single property here in Costa Rica, your taxes can obviously be mitigated by deductible expenses that you can work with a lawyer to define. That's the spiel. If you'd like to know more about corporations, be sure to click here.